host Ilyas Bulbulia, and I'll be with you for the next hour. As our regular viewers are aware, on Just Law we normally discuss an area of law which is of interest to you, our viewers. And secondly, and more importantly, Just Law is a live show where you can call in and ask us any questions that you have on any aspect of the law. On this show we should be able to cover most areas of English law, ranging from immigration matters, family matters, criminal matters, etc. Normally we get a lot of questions on immigration matters, which is fantastic, but if you do have questions relating to other areas of law, please do feel free to call in, and hopefully I will be able to give you some guidance in relation to those matters as well. Obviously you'll appreciate that the show is live, therefore we're not able to look at documents. Sometimes it transpires that we do need to look at your documents before we can advise. If that's the case, I'll ask you to leave your number with the control room, and then we can have a more thorough discussion after I've managed to look at your documents off air. Secondly, obviously if your matter is very detailed or complex, I won't be able to advise you fully on air. So I'll ask you to leave your number with the control room, then I will call you back when we can have a more detailed discussion in relation to your specific query. In my experience, what I do find is that in most cases I am able to deal with the questions that I raised live on air, and should be in a position to give you quite appropriate advice just based on the questions that you raise on air. And normally it's not the case that I need to look at the documents before I can advise further. A lot of the questions that we get, they tend to fall into certain categories, and it's fairly clear what the advice or the guidance should be. So whatever your question, do feel free to call in, even though I'm answering the questions without looking at your documents or without having a lot of background information about it. Do call in. I should be able to deal with most matters as I take your call. Now, what we've now done over the last week or so is started our sort of topics that we normally deal with again from the start. And what I looked at last week was how to make an immigration application specifically to deal with spouses coming to the United Kingdom. So it's really, we looked at how a sponsor in the United Kingdom puts together a proper application in order to call their husband or wife to the United Kingdom. We went through the documents that we'll need from their home country, whether it's India, Pakistan, Bangladesh, wherever it is, in terms of marriage certificates, in terms of copies of passports, etc. And we looked at, more importantly, what a sponsor needs to do in the United Kingdom in order to address some of the other issues that need addressing with spouse applications, such as how the financial requirement will be met in terms of wage slips and bank statements, how the requirement relating to proving that there's adequate accommodation available, how that is going to be met, and how we demonstrate that the marriage is subsisting. So we looked at the whole range of issues that need to be dealt with when a spouse application is made, and how the application needs to be put together in order for it to succeed. That was the sort of first show that we did last week after our Ramzan break. What I want to do today is look at some slightly more complicated applications that are made. As I said, normally the financial requirement in my experience is met by somebody who's in employment, normally somebody who's been working there for at least 6 months. So the requirements that need to be fulfilled in terms of wage slips, bank statements, submitting an employment letter, that's normally quite straightforward. And I went through that last week. What I want to do this week is to move on from that and look at really how the financial requirement, as far as spouse applications are concerned, how in different circumstances what the different requirements are. And in particular, what I want to start with is looking at somebody who is self-employed. They could be self-employed as a sole trader or a partner in a business. It might be a small business, it might be a large business. So I want to look at that. And then I want to look at where somebody is self-employed but operating a limited company, and the kind of documents that you need to get together in order to satisfy the financial requirement. Because if you look at spouse applications, as we did last week, the general requirements which need to be met in terms of there being a valid marriage, there being adequate accommodation, the marriage subsisting, etc., that all obviously remains the same in the vast majority of cases. Where you need to be careful and where the differences that arise is in terms of how in different circumstances there are different conditions that need to be fulfilled to satisfy the financial requirement. I would say in about 80% of cases the requirement is straightforward, in that it's a question of dealing with somebody who is in employment, and whether it's 6 months wage slips, 6 months bank statements. In one sense, the type of documents that need to be submitted to meet the financial requirement is quite simple. It's a question of certain number of wage slips, certain number of bank statements, and an employment letter. But things do get complicated when the sponsor is meeting the financial requirements based on their business or based on their self-employment. Now, the rules are certainly more complex when it's self-employment that you're dealing with. More complex because the range of documents that need to be submitted are substantially wider than the range that you have for pure employment. And I think that's where the difficulties arise. The more documents that need to be submitted, the more likely it is that a document will be missed out. A document might not be very clear in terms of it may contradict other documents, so there's more scope for discrepancies between the relevant documents. And it may well be that some of the documents which have been submitted are old or relate to the wrong period. So the more documents that need to be submitted, I think that does create more complexities within the application. And in my experience, so what I would do is, if you're submitting a spouse application based on financial documents relating to self-employment, I would certainly get legal advice in terms of whether the documents that you're proposing to submit are the right documents or not. So that's really sort of the background to what we'll be discussing today. But as I've always said before, although we're looking at spouse applications and in particular the financial requirement today, if your query relates to any other immigration matter, or indeed any other matter, please do ring the number that appears at the bottom of your screen, and we will hopefully deal with that live on air. So, in terms of the financial requirement, obviously wage slips, bank statements are the sort of most common types of documents which are submitted where somebody is employed. In terms of self-employment, what you tend to find is that most applications where the sponsor is self-employed, they will relate to self-employment as a sole trader. So that's where somebody is running the business themselves without being in a partnership. And that's also the case where somebody is running the business themselves and the business has not been incorporated into a limited company. So it's a pure self-employment type setup where the person is operating as a sole trader. The distinction is important because where somebody is in a partnership, there are additional requirements. And indeed, where somebody is operating the business as a limited company, again, the requirements in terms of documents are different. So let's focus, first of all, on the sort of simplest self-employment application, which is where somebody is running their business, the sponsor in the United Kingdom is running their business as a sole trader and not in partnership. Now, let me initially run through the documents that need to be submitted, and then let me then look at where sometimes the problems arise in relation to those documents. Now, in my experience, there are approximately 7-8 documents which need to be submitted where somebody is operating as a sole trader. Now, contrast that with an application where the sponsor is employed. there's only 3 types of documents: wage slips, bank statements, and an employment letter. So here you see the range of documents that need to be submitted are obviously wider in range. So we've got typically 7-8 documents which need to be submitted where somebody is operating as a sole trader. So what are these documents? Let me just say this at the outset, that it helps the sponsor if the sponsor can get the assistance of their accountant in getting these documents together, because a lot of these documents are documents which the accountant will be able to get hold of very quickly. So it certainly helps having a helpful accountant, because he or she will know exactly what these documents are. He or she will know exactly how to get these documents, will know what to look out for as well. So what are these documents? Well, before we start, what is, I think, helpful is to set out the relevant period that the documents need to relate to. The relevant period for where somebody is a sole trader or a partner in a business is the last financial year before the application is made. So let's take an example to demonstrate this point. We are in June 2018, about to start July 2018. So let's say you've got somebody who's operating as a sole trader and wants to make an application to call their husband or wife to the United Kingdom. What's the relevant period that the documents need to cover? Because obviously you can't just submit documents which are, let's say, 2 years old or a year old or very recent. There's a time frame that the documents need to cover. Now, the time frame for somebody who's applying now in July 2018 would be the last financial year. And the last financial year for somebody who's a sole trader or in partnership is basically April 2017 to April 2018. And to be more particular, it's actually the UK financial year for 2017 to 2018. It helps to identify what the relevant year is, because as we go along looking at the actual documents, you will see that those documents need to relate to that particular financial year. So if our latest financial year is 2017-2018, then obviously there's no point in most circumstances submitting documents relating to 2015-2016, because our relevant financial year is 2017 to 2018. So for that financial year, what do we need to submit? Now, what I tend to say to people is, let's say the starting point should really be that if you ask your accountant to get, first of all, the tax return that the accountant submits to HMRC. Now, what are the issues that arises when you go back to the accountant and say, look, I need the latest tax return? The accountants tend to say that, look, the last financial year is 2017-2018. It's just expired in April 2018, but we don't submit your tax return until December 2018 or January 2018, and that's perfectly acceptable, because the way UK taxation system works, or the system for dealing with the submission of taxation documents, the way it works is that when the financial year expires, in our case April 2018, there's no obligation as far as HMRC are concerned that the documents be submitted straight away in April or May. So it's perfectly correct for tax returns to be submitted by December, January 2019. But the difficulty is that when you make an application, and it's an immigration application, is that the Home Office isn't bothered about the fact that you have until January 2019 to submit your tax return. They're not bothered about that. What they simply want is the tax return which relates to that last financial year. So in our example of self-employment in April 2017 to April 2018, even if you're applying in July 2018, as far as the immigration authorities are concerned, you must submit your tax return for that period. You must get it done now. It doesn't matter that the requirement as far as HMRC is concerned isn't for the documents to be filed many months later. You have to do it for immigration purposes. So you have to get your accountant on board and say to the accountant, look, fair enough, normally you do these many months down the line, but as far as my immigration application is concerned, the requirement is that it must be done now. So if you take the example of somebody who is operating a little mobile phone shop, selling mobile phones, selling accessories, etc., you know, they've done their financial year, completed the financial year, April to April, you must speak to the accountant and say, look, we need to do the tax return. So the accountant will normally do the tax return, and you will need to ask your accountant for that tax return. Tax return is normally quite a lengthy document. The reason that the Home Office wants to look at that is that the Home Office wants to look at what's been declared to the tax authorities in terms of turnover, in terms of profit, etc. So they want to see what is it, what profit are you declaring to HMRC. That's understandable, because if you think about it, if you're saying that from the business I am making £25,000 a year, so the first document that the Home Office will check is this level of profitability, is that being declared in the actual tax return or not. So look at the tax return, you've got it from your accountant. What do? No harm, flick through it. It's not too difficult. As you go through it, you will be able to tell what the accountant has declared. And what we're looking for within the tax return is to see what level of profit has been declared to the tax office. Now, that tax return is obviously submitted to HMRC, and then once that's been done, once HMRC has the tax return, there's an automatic calculation which is done, and they give it a fancy name. They call it an SA302, which is produced. And what that document does is that, based on the profitability as shown in the tax return, that document is actually a calculation of how much tax is payable in relation to those particular profits. So let's take our example where you have somebody who's operating a mobile phone shop and making profits of £20,000 a year, and that's been submitted on the tax return. So this SA302 document, what it will show is that the profits as declared come up to £20,000 a year. It will then set out what your personal allowance is, which is the amount you're able to earn without having to pay any tax. It's something in the region of about £11,000. So the remainder, whatever it is, £9,000, etc., that will obviously be taxable. Now, if it's taxable, the SA302 will explain the percentage tax which is payable on that sum. From my recollection, I think it's 20% at that level. The more you earn, the higher the tax element is. So it will work out what amount of tax is payable on that. So on profits of £20,000, where initial amount is not taxable because it falls within your personal allowance, and you're left with, let's say, something in the region of £9,000, the amount of tax payable on that would be about £1,800. So the SA302 will explain that. The SA302 will also explain how much national insurance contributions have to be paid as a self-employed person, and then it will add everything up and explain, you know, the amount of money that's payable to HMRC, made up of income tax, and also made up of the amount that has to be paid in national insurance contributions. So that's what the SA302 do. Again, why does the HMRC want it? They can check what's been declared and the amount of tax that's become payable. It's an extra document which confirms or which they can look at to see whether it corroborates the level of profitability that's been declared in order to support the spouse application. So if somebody really doesn't have an income of £20,000, their income is £10,000, obviously that will become obvious by looking at the tax return, by looking at the SA302. But obviously, if somebody is earning the amount being claimed, let's say £20,000 in this example, the tax return will confirm that. The SA302, which is the calculation in terms of the tax payable on the profits, that will confirm the amount of tax payable as well. So these documents are very helpful to the immigration authorities, because they are documents which show what have you been declaring to the tax office, what is your tax liability. So that's why it's important for the Home Office. And what you need to do is make sure that the figures which are being declared, profitability figures, taxation figures, that all is in line with what you are saying to the Home Office in support of the application. Now, the next document that will normally be looked at is how much tax you've actually paid to the Home Office. So going back to our example where somebody's got profits of 20,000, actual taxable is only 9,000 because the remainder falls within the personal allowance, and there's tax and NI payable of about, let's say, £2,000 in total. What the Home Office wants to look at is, okay, that's the amount payable. What have you paid and what's outstanding? Now, there's no requirement that the tax has to be paid prior to the date upon which tax is actually payable. But if it has been paid, the Home Office wants to know how much has been paid. They want to know what the running balance is. And what you get, and certainly you used to get this, is a document called a statement of account, which is the running balance of the amount of tax payable, the amount which is now payable for this year, how much you've paid, what the balance is which is still owed to HMRC. So that's an additional document that needs to be submitted to the Home Office. If you can't get hold of that document, the accountant should be able to normally print off a similar document from the HMRC portal, which deals with your particular tax affairs. So in terms of tax, as I said at the outset, what you really need is an accountant who is helpful, who can get you the tax return in time for the right period, who can get you this document called SA302, which is the calculation of the taxes payable, who can get you also the running balance of how much you have paid. So these are the documents that we need to make a successful spouse application where the income is based on self-employment. You could have a little shop, you could be doing taxis, whatever it is. If you're a sole trader, they're the three key HMRC documents that you need to get together in order to meet the financial requirement to make a successful spouse application. Now, just before I move on, what I should say is, in terms of the accountant, unfortunately the Home Office is actually quite strict in terms of the accountant that you use who prepares your financial accounts, and that's something that I'm going to deal with next. The Home Office is only prepared to accept the accounts which have been prepared by accountants who belong to certain regulatory bodies, such as a chartered accountant or a chartered certified accountant. There are certain other categories as well. But if you need to be careful, because if your accounts are actually being prepared by somebody who doesn't belong to one of these regulatory bodies, and it does happen, and somebody who might just be a bookkeeper, they've got their qualifications but not qualifications at a level where they are chartered or chartered certified, the problem that you might face, and the problem you are likely to face, I should say, is that the financial accounts that they prepare, which are then used to prepare the tax returns later on, the financial accounts that they prepare will not be accepted by the Home Office, because in addition to these tax documents, the tax return, the self-assessment document, the tax calculations, etc. In addition to those documents, you do need to submit the accounts which the accountant produces, which shows your turnover, which shows your gross profits, which shows your expenses, and then shows your net profit. So that document has to be submitted, but that document has to be prepared by an accountant who is a member of a regulated body which is accepted by the Home Office. Now, in my experience, the majority of those accountants will be either chartered or chartered certified accountants. I think there's another organisation, IFA accountants, whose accounts will also be accepted. But if somebody is merely, let's say, an AAT accountant, very experienced, no doubt, been doing this for a while, knows exactly what they're doing, but because they don't fall into the categories of acceptable qualifications as far as the Home Office is concerned, they won't accept their qualifications. So it's important that obviously you do get the help of your accountant when collating these documents, in preparing these documents, but unfortunately it will have to be an accountant whose regulatory body is a regulatory body which appears on the Home Office's acceptable list of regulatory bodies. So, you know, we've looked at the taxation documents, we've looked at the need to have a proper accountant who does the proper accounts for you. Again, these are the documents that we need to submit with a spouse application in order to call your husband or wife over from India or Pakistan. Now, they're the sort of main accountancy type documents, if we call it that. The next document, which is important, is your personal bank statements for the same relevant period. As I said at the outset, you always have to work out which period the documents need to relate to. And as I said, somebody making an application in July 2018 would have to submit documents for April 2017 to April 2018, and that's the relevant financial year, and you will need to submit bank statements for that period. Now, you might be thinking, well, look, you know, we've submitted the tax documents, we've submitted our accounts, why do we need to submit bank statements for that period? Now, to be quite honest, in my experience, as far as the Home Office is concerned, the bank statements are the most important piece of documentary evidence that you submit, because this is the way they think, that as far as tax returns are concerned, you could really declare what you want. Nothing to stop you saying, I've got profits of 30,000, 20,000, etc. If you've got a calculation of the tax payable, that's going to be based on whatever you've declared. So whatever you've declared, 20,000, 30,000, your tax will be paid on that. In terms of the running balance of the amount of tax you paid, etc., again, that's all based on what you've declared. The accounts, the accountant will prepare whatever documents you give to, so whatever documents relating to turnover, etc., you give. But they tend to find that the personal bank statements for that relevant period gives a true picture of what the business is actually doing. So let's take an example where you're saying, well, my turnover is £40,000 a year. The reason that they want to look at your bank statements is to see whether your bank statements are such that they are in line with a business which has a turnover of £40,000 a year. A turnover of £40,000 a year business would normally have money going in to the account of, let's say, something in the region of £3,000 to £4,000 a month. That's the only way you get to a turnover of £40,000. So that's basically what the Home Office is looking at. Let's take the example of somebody who's a taxi driver in the United Kingdom, wants to call their husband or wife over from abroad. Now, what the Home Office does want to look at is, what do their bank statements show for the period April 2017, April 2018. They want to see how much money has gone into the account. Now, if in this example, a taxi driver who's shown that the receipts that they get from the work that they do, that amounts to £25,000. So they should be putting in approximately £2,000 a month into their bank account. But all that they've done is deposited, let's say, £700-800 a month. So here there's a big discrepancy. What the Home Office wants is, with a business which has a turnover of £24,000-25,000, they want to see that you're depositing about £2,000 a month. And if the taxi driver comes along and say, look, the only thing that I've done is deposited £700-800 because, you know, I've used some of the money for paying for the petrol, I've paid my base rent, etc. from the money, it might be that this will cause a problem, because the Home Office might well turn around and say that your bank statements for the relevant period do not demonstrate that you have this level of income coming in. So you're claiming that you've got a turnover of 24,000 pounds a year, your profits 19,000 pounds a year, but your bank statements simply do not reflect that. Your bank statements only show an income or the amount of money going in of £700 to £800 a month. So that's the problem, that although the taxation documents, they're easy to get right, the difficulty that arises is with your personal bank statements. I think that's where the problem is as far as spouse applications are concerned. Now, if you've got any questions relating to this or any other matters that we're discussing, please do pick up the phone, give us a ring, and we'll have a discussion about it. But just going back to the bank statements which need to be submitted, the other difficulty that I find is that, let's say somebody is now today thinking of making an application for their husband or wife. So they're getting the documents together, and obviously what tends to happen is they've got in their mind the fact that they need to sponsor their husband or wife. So over the last few months, you find that, you know, they've started putting money into their bank accounts properly. So they might have fantastic records for March, April, May, June, but when you say to them that actually we need to submit documents, not for the last 3, 4, 5, 6 months, we need to submit documents for the last financial year, April 2017 to April 2018, what you tend to find is that they haven't really addressed their mind to that as far back as April, so they haven't been putting the right amount of money into their bank account, and the amount of money that's gone in maybe is as low as £7,000-8,000 a year. And what they now want to do is declare profits of £20,000 a year in order to make the spouse application or their spouse's application valid and strong. And what you find is that the Home Office, once they look at the bank statements, the likelihood is they will reject the application on the basis that although your tax documents confirm that you're making fantastic profits as far as your personal bank statements are concerned for the relevant period, they do not simply back up the level of profitability that you're claiming in your tax documents. So the key document normally tends to be your personal bank statements. If you get them right in terms of the amount of money that has to go into the account, if you get that right, what you tend to find is that the application is more likely to succeed. Let's take the call that's come in, and we'll go back to this topic later on. Hello, assalamu alaikum.
Hello, assalamu alaikum.
Ji, walaikum salam. Ji, thank you for calling. Ji, what's your question?
Yeah. My name is Smile actually. My son is married in India.
Okay, okay.
He's working somewhere.
Okay.
Around about £400 a week, but he's getting the cash in the hand.
Okay, okay.
He's got wages slip as well.
Okay, all right.
But his bank account, it doesn't show that much money in there.
All right, okay.
Do you think is helpful that?
It's going to be problematic because the starting point is cash in hand isn't a problem. So you could.
But if you have a wages slip completely with the paying the tax and everything.
So cash in hand isn't a problem. If you have proper wage slips, that's fantastic. The issue is that, you know, the net pay on the wage slip, whatever the net pay is, that is the amount which he has to himself put into his bank account, exactly to the penny. That's the real issue. So has he been depositing the money himself properly or not up until now?
No, he didn't deposit much money in the account. Okay. That's the problem.
Right. Okay. So in my view, look, there is no point in making the application yet. Even though he might have worked for 6 months, there's no point making the application. What he's better off doing is, from now on, he starts putting the money in properly. If he gets weekly wage slips, he puts the money in weekly. If he gets monthly, he puts the money in monthly. So he puts the money in on time, and he puts the exact amount of money in to the penny. So if the monthly wage is £1,230.21, he has to make sure that he even puts the 21 pence in. So that's what he needs to do. Now, in my view, he's got to start now, and if you wait another 6 months, that will take you up to December 2018. He'd be better off applying at that stage. His application is more likely to succeed if he does that. If he simply applies now, in my experience, the application is almost bound to fail. I would say if the money doesn't match up, it's just 99% that the application will be refused.
What about the parent can support him some and how?
Yeah, parental support, which they call third-party support, is only really accepted in exceptional circumstances. Exceptional circumstances, let me give you an example. That let's say the wife is in the United Kingdom, the husband is abroad in India, let's say. So wife is in the United Kingdom, she is looking after a child who is ill, can only work part-time. So they might say, look, that's exceptional. We are prepared to let you rely on income that your parents have, let you rely on their savings, let you rely on their employment income. But you have to establish, first of all, that the circumstances are exceptional. Now, here, obviously, your son is working. I assume from what you've said, £400 a week, so he quite easily meets the requirement. There are no exceptional circumstances. So, again, there is no point making an application based on support from the parents or support from relatives. However wealthy the parents or relatives are, there's no point making that application, because the requirement that these have to be exceptional circumstances, that requirement is not met in this case. It's just a normal application. In a normal application where we're relying on normal income from employment, we need 6 months wage slips, 6 months bank statements showing that money going in properly. It has to be done that way. There are obviously other ways of meeting the requirements, such as cash savings, but the amount of cash savings that you need is substantial. So very few people actually are able to meet that requirement. And again, those cash savings would have to be in your son's bank account, not in the parent's bank account.
What about if you can put some money for this last 6 months,
Yeah.
money in lump sum in the account?
Yeah. So let's say somebody has a gift, somebody's received a gift, your son receives a gift of, the requirement would be 62,500, a substantial amount of money. So let's say he gets a gift of £62,500. Fantastic. Now, the next requirement is the money has to be in his bank for 6 months. So again, he's not in a position to apply now. He has to wait for 6 months, which would take him to December 2018. Now, in that case, he could simply say, I'm not relying on my income from employment. I've got enough savings in my bank account. I've got £62,500. I've had it in my account for 6 months. Here are the bank statements which show I've had the money for the last 6 months. You can rely on that. Now, they may ask, where has this money come from? So you could say it's a gift from my parents. That's perfectly acceptable. They don't class that as support from the parents, because that's a gift that's been made and your son becomes the owner of that money. So that they will accept. But again, the key thing is, if you do make a gift in terms of money, the money has to be in his account for a period of 6 months in general terms. There are some exceptions, but in general terms, the money has to be in his account for 6 months. So practically, that delays you for 6 months again. I hope that answers your question. But if you do have any questions, we're going to take a break. If you do have any questions, please do give us a ring after the break. So now we're just going for a short break.